Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Alrighty, so looking at our market today, we closed just shy of 7,400 once again. 74 has been a little bit of a magnet to our market for the last 2 or 3 weeks. It's interesting to see though now we have a bit more momentum in the movement. So you can see here the last push up towards 74.68, the most recent resistance, was met with very little momentum. Now we've got a bit more volatility back, right? And this often happens just before another big move as well, by the way. So the question is, how convinced are you of that move being up or down? Right? For me, I think it's going to be up. I think we'll shoot back up and test this 7,600 level very soon. Okay. Big question mark now on whether we're going to break into all-time highs. So probably a little bit more optimistic, a bit more bullish in recent times. But with the current breakdowns in iron ore and China meddling in the commodities market and the commodities futures markets a little bit, holding those commodity prices down, we're really going to have to see some of those other sectors do the heavy lifting here. Because at this stage, there's a lot of nervousness around those materials. So look, it's going to be interesting to see what can drive us up there. I think at this point though, really now we're getting beyond the RBA and a few big bits of news that we needed earlier this month. We could clear the way for a push higher. We're definitely lagging the US movement at the moment. We'll talk to that a little bit more in a moment, where we're seeing the US break into blue skies, but we've just stagnated. Okay, big part of that stagnation, guys, has been a bit of mixed reporting, but also obviously the big pullback that we've seen in commodities recently. So if we jump over to the US markets, the S&P 500 has been very strong. Okay, it's continued to kick up into blue skies. All right, looking a little bit overbought, okay, by most of my indicators that I use. But in saying that, there could easily be another, say, % or two in this move. We may not yet have seen that top. Nor do I think we're at close of an overall top. When I say finding the top, I mean a short-term top before we do another pullback. So I still think we're in the continuation phase. I still think we're going to get a further upward kick from here. US reporting has been very strong, and that should continue through the rest of this week and next. So yeah, look, I think there's a little bit more upward movement left in it, but by all means, we're getting a bit overbought in the US, and at some point in November, I'd suggest that a small pullback will have to happen as we see a bit of profit taking come in. Okay, so big news this week, RBA update yesterday. We saw a bit of a shift in the overall we saw a little bit of a shift in the words for the first time in maybe a year. Okay, what we're starting to see obviously is the RBA becoming, I wouldn't use the word hawkish here, but definitely starting to see the end of this extremely accommodative central bank stance that they've got. Okay, so we know they've started tapering the bond purchases. They're going to revise that in February. Okay, so they're still buying bonds at a huge amount. They're also going to continue to maintain the 10 basis point cash rate target. But what they are doing is they're no longer targeting the yield curve, or they're not going to continue to target the yield for the April 2024 bond. Now, there's been a lot of chatter around suggesting that interest rates are going to shoot up early in Australia. Philip Lowe basically came out and said that's not the case. They see interest rates potentially going up late 2023. So look, the view is a little bit earlier. They're saying 2024 before, but late 2023 is still a very long time away. What we need to remember is, even though that the core inflation targets are starting to being met here, they want it to sustainably be around that 2.5% mark. Okay, so that means we need to see inflation stay here for a while. All right, so I think there's definitely a willingness there to sit on their hands. Okay, we're going to see bond purchases continue to be tapered off. Okay, at the current rate of 4 billion per week. We'll see mid-February that will taper off again. By how much we'll soon find out. But nonetheless, you still got extremely accommodative central bank policy here, which means they're still trying to strengthen the economy. They're looking for wage growth. They're looking for full employment. So at this stage, for me, it's still positive, guys, right? We've definitely got a strong couple of years in front of us coming out of this COVID lockdown situation that we've been in. And the central banks aren't really tightening monetary policy all that quickly. So, I think that was at the end of the day, we saw a little bit of a pullback on the market on this. Okay, a few people definitely worried about interest rates coming up in the short term. We're seeing movements in the bond markets that are suggesting this. I still think that's not going to happen at this point, and I think there's something we'll be worrying about in 2023, not really over the next 12 months. Next 12 months, we want to see immigration back. We want to see students coming back to the country. We want to see commodities start to pick back up again once we get past these China Olympics. So they're all the things we're sort of affecting markets right now. I really don't think we're going to be pulling back on the thought that interest rates are going to be going up anytime soon in the local space. So it looks like we still have a strong year ahead of us next year at this point of time, as long as we don't see another hit of COVID or any other lockdowns. So US keeps pushing into blue sky territory. As I said before, it is looking a bit overbought now, but in saying that, I don't think that the rally's finished just yet. Very strong reporting, which means we could easily get a few more weeks out of this before we start hitting a few other realities. Okay, one is obviously the Fed tapering. I don't think it's going to have much of a change to the mood of the market. Maybe a couple of days of volatility on the back of it. Nonetheless, that's happening this week. Okay, so early hours Friday morning, so our open Friday will be reacting to the Fed announcement. We already know they're going to start tapering their bond purchasing as well. What we don't know is by how much and how quickly. Let's see what the mood is there. Okay. So the Fed, that's probably your next big announcement, guys. All right. I've already mentioned US reporting. It's been a huge reporting season once again. Most stocks have been beating expectations, but you must remember a lot of those expectations were put very, very low after the last reporting. Okay, and that's why the US markets dragged a bit sideways there for a while. But now we're starting to see that things aren't as bad as once thought. Markets are kicking back up again. So this is definitely a reporting season rally that we're seeing at the moment. Once that rally's done, we'll be back focusing on other things like Biden's spending agenda. So, look, there's a few things in the US we need to watch out for. One, we don't want the Fed to be tapering or pulling back on their, they've also got very extremely accommodative stance over there. We don't want that to be unwound too quickly. We don't want this bond buying to end too quickly. We don't want to see interest rates go up too quickly over there. We want to see positive economic data. We want to see a positive economic view from the Fed, but we don't want to see them take action too quickly. Right, so that's what we're looking out for. The other part of it, as I said, is obviously we want to see more stimulus coming from Biden, as he has promised, as that has helped the market rise this year. If the market doesn't get that at all, then we might see a bit of a pullback. So we've got to really keep an eye on that. We've got the debt ceiling also hanging over us early December. That's a problem the market's going to have to face in a few weeks' time. What's going to make things even more interesting is that the Democrats have just lost the Senate seat of Virginia, which could make it a little bit harder again for them to pass this spending agenda of Biden's. So, look, it's going to be a moving target over the next few weeks, the next month or so. And these are just the things we're going to keep an eye on, okay? We're lucky we're seeing strong economic data for the moment. We're lucky we're seeing a bit of a recovery-driven path forward right now that's seeing also strong company reporting. And that's what's keeping the markets buoyed. But, we also want to see this extra bit of stimulus and spending coming through from Biden, because I think a lot of analysts have been pricing that into their forward guidance as well. So let's just see. All right, only time's going to tell. Like I said, we've got sort of a US market that's looking a little bit overbought, but is likely to keep pushing up in the next week or so. But then once we get to about the middle of November, let's start worrying about the debt ceiling issues and whether Biden can get his spending through, because that's what the markets will start to focus on that side of things. So that's really what's happening, guys. Look, locally, like I said, once again, I do think we're going to drive up and test the all-time high soon. We've lagged behind the US for a bit. We need to get this RBA announcement out of the way, which we have. And if we can clear through 74 and then through 74.80, which is the next couple of resistance levels, I think 76 is not far away, and it's quite a reasonable target. So that's where we're at the moment, guys. Okay, so I'd be bullish to sideways this market in the short term, and watching for a US pullback, maybe in a few weeks' time. All right, so thanks for listening in. Take care, and bye for now.